Oscar Onyema, Chief Executive of the Nigerian Stock Exchange. Nice to see you.
Thank you very much.
And as I mentioned to you, I've actually been to the Nigerian Stock Exchange, and you've said in the last couple of years there's been a lot of changes and updating. Where are you in terms of becoming more of a developed country stock exchange?
I would say we're still somewhere in the middle of our journey. Certainly from a technology perspective, we have a fully automated market today. We use the Extreme Trading Platform, which is a NASDAQ platform for matching of trades. But more interestingly, our broker dealers can now access us using their order management systems. What that means is that the investor using their mobile phones on their desktop can enter orders, can see market information, can interact in the market using the order management systems of the broker dealers. From a clearing and settlement perspective, the clearing systems are also highly coupled with the matching engine. And so you have straight-through processing. So that's the first step. The second thing we've done is to make ourselves a multi-asset class exchange. So we're no longer your typical equity exchange. We now offer listing and trading in fixed income securities. We've also rolled out exchange traded funds. We've listed 7 of those, and we continue to expand that business. We're working on our derivatives product, which we hope to roll out sometime next year.
What investors are you attracting with some of these changes that you've made? What's the typical investor now?
So if you look at our investors from a geographical perspective, it's 50% domestic, 50% foreign. That's market activity on a daily basis. That 50% that is foreign is split 60% from Europe, 20% from the US, 5% from the Middle East, 2% from Asia, and the rest from Africa, mostly South Africa. From a type of participant perspective, the institutional breakdown, most of the foreign activity is institutional, so money managers, Africa funds, frontier funds, global emerging market funds, and the like. From a domestic perspective, you have institutional and retail breakdown, right? The institutional is about 56%, and the domestic is 44%. So it's a very diverse set of participants in the market.
So a lot has changed in the last couple of years, and I'm wondering how the development of the stock exchange mirrors the development of Nigeria and being able to allow people to access capital a little bit more easy, how that's helped and filtered back into the economy.
As you know, the exchange is really a barometer of the economy, and it tries to mirror what is going on in the economy, and it's actually one of the forward indicators of what will happen in an economy. Ours is no different, even though we do not fully cover all the sectors of the economy. It's a very good gauge. And so what you've seen in the last 5 years is an economy that has expanded, that is open for business, that has attracted foreign portfolio and foreign direct investments, and that has been reflected in our capital markets. And so we've had to change a lot of things, from market structure to rules, from a regulatory perspective, to the fact that we wanted to make sure that we're giving investors and savers a platform that encourages the mobilization of resources to be deployed to where they are needed, both on the public and private sector side. We also worked very hard to have deep liquidity in our marketplace to satisfy demand and supply. And so we saw an increase in average daily value traded. And so those are some of the things that you look at to know whether you're reflecting the state of your economy. If you look at our market today, as you know, Nigeria is just recovering from global commodity price shocks, which is also coupled with the fact that the US dollar has strengthened, and so has given us challenges around FX. That is also reflected in our marketplace with the slowdown we've seen in the market in the last 1 year.
Oscar Onyema, great to speak with you. Thank you for your time.
Thank you very much.